Across the U.S., borrowers owe more than $1.7 trillion in student loans as of the second quarter of 2024. That's according to the Federal Reserve. But there's quite a difference in how much folks are paying each month across all 50 states. Here with a closer look, we've got Chris Lupo, who is the analyst and writer over at Wallet Hub. Great to have you here with us. Chip, excuse me. You know, as Chip, we're thinking about the delta, the difference between how much people are paying in different states. I mean, just how far is that spectrum?
Well, Brad, the range is from the highest is New Hampshire, $229. That's your average monthly student loan payment, and go all the way to the bottom of the list, and that's tied for, like you said, tied for 49th is Arkansas and Mississippi, with an average balance of average monthly payment of $142. So that's quite a range from top to bottom.
Yeah, absolutely. Okay, so as you're thinking about the ability to pay down student loan debts and of course the different strategies that have been talked about, teased, and ultimately gotten tied up in the courts, you know, how has this all impacted the payments and the payment scales that we've seen as well?
Well, it gets more and more difficult. Again, this is all varied by state, and there's a number of factors that come into play between states. Again, some states are just let's sort of pivot a little bit about we're talking here about the monthly amounts, but some states are actually better than others when it comes to managing their student loan debt. So that's a factor. It's not part of this particular study. But I think there are states, regardless of what economic trends, are just traditionally better. State residents are at paying down their student loan debts and not having those loans become delinquent.
And so when you think about the ability that people have and tips for paying off student loan debt faster, what can they tap into? Okay,
now if you're already saddled with student loan debt, a number of things you can do. And the obvious one is, of course, create a budget. You know, analyze your spending, cut out any unnecessary expenses. And I know that's hard, particularly when you're just out of school and you're trying to get your career and your life on track. And just stick to that budget and review it regularly for any kind of changes. You know, changes in interest rates or any other types of expenses. Prices of items go up and down, so you want to be able to make adjustments for that. Boost your income. Consider taking a part-time job or a side hustle, or simply seek a higher-paying job. Look at forgiveness programs. A lot of times, and I'll give you an example. My wife is in a doctoral program for a nurse practitioner, and she's taking out substantial student loans. But part of the deal is that if she agrees to work in a rural healthcare setting for 2 years, they'll forgive that debt. You're seeing that in a lot more areas, particularly areas in which it's harder to retain employees, such as nursing or even teaching. Also, check your employer benefits. A lot of companies will reimburse you for tuition, but the catch is, in a lot of cases, you're required to take a field of study that's related to your job. Most companies, the health insurance companies, not likely to pay for you to study art history, something like that. And of course, make your timely payments, not only on your student loans, but on all of your accounts. You avoid late fees and any types of high interest debts if you keep your payments on time and try to pay more above the minimum amount when possible.
Certainly. And Chip, just lastly, while we have you here, student loan debt, the average out is about $38,000, I believe. So all of that considered, if you think about the payments across each state, what type of time frame are we talking about for the average person to be able to pay off their student loans after they've been able to, or have taken on and been saddled with that debt?
Oh, it could take several years depending on your field of study. Well, for example, let's just take a look at the top 5 here as far as student loan debt. We talked about New Hampshire, Massachusetts, Vermont, Connecticut, New Jersey. Are you seeing a geographic trend here, Brad? These are all Northeast New England area states where cost of living is substantially higher. There are a lot of really good, really expensive, mostly private schools. And the economic opportunities there, cost of living is higher. And then there's opportunities for additional education professional schools, graduate schools. So the odds of increasing that debt are even higher. So again, it just depends on where you are, but you're talking several years. I mean, I know folks that are in their mid to late 40s who are just now paying off their undergraduate student loan debt.
Wow. Chip Lupo, analyst and writer at Wallet Hub. Chip, thanks so much for taking the time here and for some of the details from this study. Appreciate it.
Anytime, Brad. Thank you so much.